Just wanted to say good morning. Welcome to All Up in Your Small Business. This is a webinar series that is hosted by the Greenville ENC Alliance, and we really appreciate you being here today. My name is Baylee Fox. I'm the Business Development Manager at the Greenville ENC Alliance, and I'll be moderating today's webinar. If you're not familiar with our organization, just a little bit of background. We're a public-private partnership which is focused on promoting economic development in the Greenville-Pitt County area through things such as industry recruitment, expansion and retention, the development of sites and buildings, marketing and promotion of the community, workforce development, which also includes talent attraction and retention, as well as small business and entrepreneurship efforts, which is why we're all here today. We're really excited to host this webinar on a monthly basis. We feature speakers on various topics, which help small business owners and entrepreneurs start, maintain, and grow their business here in Greenville-Pitt County. So today we're honored to have Bryant Kennedy from the Carolina Small Business Development Fund, which is a nonprofit organization dedicated to supporting small businesses in underserved communities across North Carolina. Today you'll learn about how the Carolina Small Business Development Fund can help you secure capital you need to start or grow your business, even if you don't qualify for traditional bank loans. So we'll learn about their flexible loan options, special programs, and the 6 C's of credit that guide their lending process. This session is designed for entrepreneurs who are looking to access funding, receive personalized business assistance, and achieve financial stability. Just a few housekeeping notes before we get started today. If you have a question during the presentation, please feel free to put it into the chat. We'll have a time after Bryant's presentation for Q&A, but you're welcome to ask questions all throughout the presentation. And they will be addressed when we get to that Q&A portion. Please stay on mute throughout the presentation, and then the webinar will be recorded. So if you need to leave for any reason while we are going through the presentation, we'll send the link out to the recording, as well as with Bryant's contact information within 24 hours of the conclusion today. So without further delay, I'm going to go ahead and introduce Bryant Kennedy. Bryant is a seasoned finance professional who has over 16 years of experience in the banking and community development arena. He specializes in supporting small businesses, from providing tailored financial solutions to building valuable partnerships. And as a business solutions officer at the Carolina Small Business Development Fund, he is dedicated to empowering entrepreneurs and fostering economic growth in the Eastern Carolina region. Bryant is a native of Goldsboro, North Carolina, and a resident of Raleigh since 2011, and he is deeply interested in the success of North Carolina's small businesses. He holds a bachelor in banking, corporate finance, and securities law from East Carolina University. Bryant, thank you so much for being here today, and we're very excited to hear your presentation.
Thank you so much, Baylee. I had to remember for a second that you were talking about me there. Incredible opportunity to be here. Very grateful to be able to share on behalf of the Carolina Small Business Development Fund a little bit about our organization and our process, and really kind of being a resource for our small businesses and resource providers that are looking for access to capital, and just kind of the process of getting the funding that they need. So thank you so much, Baylee. Again, a little bit about myself. As Baylee mentioned, I'm a native of Goldsboro, North Carolina. Attended East Carolina University. I kind of define myself as a recovering banker. 16 years of about 16 years of mortgage lending. Was a branch manager for a handful of years. I went into private banking there for a while, and due to some economic changes in the security world, I ended up transitioning to small business, and really just fell in love with it. I really feel like it all ties in together. The personal finance, as well as being successful as a business owner, and having that experience, and now being with the Carolina Small Business Development Fund, which is a grassroots organization. We're in the trenches with our small business owners, helping out with application preparedness, reviewing business plans, reviewing financial projections, providing some industry data to benchmark their assumptions, helping connect some of the dots with some of our financial professionals, accountants, and the eco partnerships that are, here in the not only the Wake County area, but Pitt County, Nash County, and so forth. Amazing university systems have really good resources for our small business owners as well. Um, helping with some of those technical assistance, because there's access to capital, and then there's, really, helping our business owners with their plan. What is your plan? So we'll get into some of that. Guess it's probably best to maybe jump into the presentation because I can go all day talking about this, but let's see here. Go into full screen mode. All right. So who we are, Carolina Small Business Development Fund. We're a nonprofit, CDFI, uh, fosters economic development in underserved communities by providing capital, business services, and policy research to support small businesses. The component of this that's really important is the CDFI. So may or may not be aware, CDFI is a uh, community development financial institution. So we are a lender, non-depository lender. So we don't open up checking accounts, savings accounts. You can't invest necessarily with us. We provide capital primarily through loans. We do coming out of COVID, there were some grant funding available. We're doing a lot with the Western Helena Impact. So we have some partnerships out there where we're kind of co-facilitating some funding out there. But the CDFI gives us it's mission based and allows us that flexibility to do some things more creatively than and then at the bank. One of those things that we're able to take advantage of is the SBA Community Advantage 7A program. So that allows us to use future projections for our small business owners, startup companies that obviously you wouldn't have the historical data, right, to be able to qualify for a repayment of a small business loan. So the CDFI gives us that type of flexibility where we can be able to use those future projections, those assumptions, and with the right business model, we can provide that type of funding. We have uh, some other components of this under our umbrella. We have the Western Women's Business Center. They're based out west, and they serve everyone. However, it is a dedicated focus to women in business. Great team out there, doing a lot of great things, particularly with the Helena efforts. Then we also have our Latino program. So we have a dedicated, program for our Hispanic and Latino self-described business owners. And because that's one of the things that's really coming up in the business world is about resources for everyone. And one of the challenges that our Latino community may have at times is a language barrier, right? And so to be able to provide those resources has been incredible. So let's see here. So who we are, we fulfill a critical lending need for startups, existing businesses in North Carolina with a special focus on underserved entrepreneurs. We provide the opportunity for small businesses to succeed while achieving financial stability. So we serve, as you can see with this, kind of the pie chart there, a partner for small business in the Carolinas, kind of serving as that incubator for information. So although we are a lender, we help bridge the gap between all the resources that are available. If the client isn't necessarily ready with their business plan, with their financial projections, we serve as a point where we can make that transition to help them get more capital ready. An accessible funding resource, a trusted business guide, a small business advocate. Who are our loan clients? Those who likely do not qualify for a bank loan. Specifically, it's not, um, some of the components of that are we aren't a credit score lender, right? So we do take a look at the last 24 months of credit history. However, we're not looking at a 620 FICO, a 680 FICO, a 720 FICO. We're really looking at the character and looking at kind of the stability of the client that we're working with. And we also understand that life happens, right? There's illness, there's job loss, there's a divorce, there's, things that we all, experience or have someone very close to us that have experienced that changes your financial landscape. So if there are some issues, we like to understand what those issues are. And if it's a compelling reason, if there's an explanation, we just want to be prepared to be able to explain that. Another variable with that is down payment. So we'll get into that a little bit later, but we have very flexible down payment or borrower injection requirements. When you go to the bank, primarily, you're going to be looking at 20 to 30% as a startup, or even more, depending on the type of investment that you're making. So with us, we can have that requirement as less as 10%, depending on what you're borrowing. Also collateral, many times there may not be a collateral available, so we're able to leverage some of the guarantee programs, SBA, again, that allows us the flexibility without collateral to still be able to grant significant funding to our clients. So and also it's good to mention that we partner with the banks, so we don't consider ourselves to be competitors. So our mission is to help our startup or even an existing business that may have some challenges and just really needs to get their feet underneath them, get some history, get some financials. So that way we can make the referral 3 years, 4 years from now. We can make that referral to our banking partners. So it's a great partnership, and one of the things that I like to mention. So how CSBDF fills the gap. So again, we provide small business lending for borrowers who currently do not qualify for traditional lending products because borrowers require small loans, modest equity. They have business for less than 3 years. And, when we mention require small loans, sometimes if you've had this experience, you may go to one of a larger lender, and if it's not $500,000, then you can't necessarily work with a small business banker. You may get a branch manager, you may get someone with some business acumen. However, for those larger opportunities, there's really not a dedicated resource to be able to kind of walk you through the process. So that's another way that we kind of bridge that gap. So we offer several federal and private lending programs to create jobs, provide specific loan products that are not available through traditional banking institutes. We offer loans. I think there may be some pilots with lines of credit. However, I do want to specify that we do offer loans up to $350,000 for all types of businesses in a wide range of industries. So we aren't necessarily what you call it, a hobby lender. But if you have a business plan, this is, something that you have a 2 to 4 year, outlook on this, and it's not just kind of something for passive income. We do that type of lending and give that type of advice. We are very retail friendly. That's another thing kind of at the bank. Retail gets a little bit, because it's a higher risk. So we lend to retail, restaurants, clothing. So has been a great opportunity for me being in this world to be able to have those conversations with those retail businesses and be able to provide capital for them. flexible terms to meet your needs. Rates typically between 9 to 12%. So we do benchmark the Wall Street Journal. So rates are just historically, well, depending on who you speak to, they're historically high. So, looking at a 7.5%, prime, 9 to 12, it isn't the cheapest, but it's also not a predatory, 30%, rate, right? We try to be modest, assuming the risks that we're taking as well, right? On a small business, on a startup business. Personalized assistance guidance to help grow your business and achieve success. So again, we just don't you actually have to go through a process to take out a loan with us. So we we have an intake process. We understand what your goals are. We ask questions about your history. We ask questions about how much money you have saved, things of that nature. Then we transition into tell me about your business plan. Let me see your financials. Really kind of getting into the trenches with, all right, are you loan ready? So really kind of meeting that business owner where they are. Loan terms, loan amounts up to 350,000, micro loans up to $50,000, the 10% equity requirement, interest rates loan term, and so forth. Another thing about this loan term that I want to mention is many times we decide what the loan term is based on the project. And with there many times not being collateral available, we look at the lease. So if you're assuming a lease, we really want that loan term to align with that lease term. So when I'm making doing my business assessment and we need a letter of intent if you intend to lease, I always ask to negotiate with the landlord to make sure that you're getting at least a 5-year with a renewable option. That gives us that flexibility to be able to lend you for at least 5 to 10 years. So that's really critical. When you start looking at 20 years, that's where your real estate secured. Kind of that 10 to 15, if you're purchasing a truck or, some type of, permanent working capital, you can start looking at some of those longer terms. But that negotiation of the lease, if you're assuming a lease, is really important. I think I just skipped a screen there. Let me see. But we're an approved lender for the SBA, USDA, also a variety of different guaranteed loan programs. So as I mentioned, SBA is one of our primary lending sources, but also the USDA. They have some great RMAP and micro lending that allows for even more favorable interest rates. The loan amounts are typically a little bit less. Probably looking at more up to 75,000 on average, but it allows a business owner to access government funding at a more competitive rate. And also some of the criteria that we look at is a little bit more flexible because there is some government backing behind it. And this just kind of talks about those different programs and the disaster relief, our veterans program, Latino program, women program, and et cetera. 6 C's of credit, capacity, capital, collateral, conditions, character, cash flow. I know to many, maybe some on the call that have heard of the C's of credit, you normally have your 4 C's, right? Or maybe your 5 C's. As a lender, we do like to mention, cash flow, as well as the conditions. And we'll kind of get into that. But cash flow, when you're building out your business plan, I saw Corey Barber on the call, sure he can appreciate this. When you're doing your projections and you're, looking at your assumptions, you need cash flow, revenue. Like that's where, that's what we're looking at, also the understanding of your expenses. So those assumptions with your expenses are crucial, going out, getting quotes. Are you working with someone, have you reached out to a mentor in your field? What are those, what are those, real-time expenses, whether through experience or making that phone call to really determine what your cash flow is going to be. So you got your capacity, that's your ability. Using the evaluation of the repayment ability from primary, secondary, third source of loan repayment. And it says, what do you think we use to make this determination? So, the primary thing that we're looking at is cash flow of the business. However, we do factor in if you're still working a 9-to-5 job, if you are receiving veteran benefits, access to some other passive forms of income. We do consider those. However, we do want the business to be kind of that primary repayment source. We're looking at a 1 to 1.3 ratio on that, and we can kind of get into that if anyone has any specific questions. Capital, your equity contribution. How much money do you have saved? And I totally get it. We are on this call and I'm a part of this organization because access to capital is a problem, right? It is a roadblock but you have to save. You have to come into it with, at least, looking at your overall project. If it's going to take you based on your projections, if it's going to take you $100,000 to, execute on this plan, $10,000 is kind of what, you need to have in the bank, some type of liquidity access. As a startup, one of the things that I run into is, many people want to use the equity in their home as that down payment, right? So my advice for someone that is looking at their home as equity is to go ahead and capture that equity in cash. So if your plan is to start this business in a year, looking at your home equity options, that may be, one of the things to consider, because we, as a startup, we aren't we want to see that cash in the bank to just kind of keep that short. Most lenders want to see 10% investment or 90% loan to value. Why do you think lenders are reluctant to do 100% financing? I think that's, may or may not be, it's the risk, right? So we want to see some skin in the game, to kind of make sure, see how, serious this business is, with their plan. Collateral, we just kind of talked about that. We can use machinery, equipment, vehicles, account receivables, inventory, and other assets that can be resold. So the capital and the collateral kind of ties in together. However, we do look at those separately, and that's where, using your home, with that equity is collateral, but it's not capital. Conditions of the economy. Conditions play a role as they represent external factors that can have an impact on the financial health of an organization. So when we think about a current circumstances, I tie it again back to Helena, very devastating. But to start a business, right now where, we're in recovery efforts, is something that we will consider. Not to say it's something that we won't do, but we would want to understand, the value proposition. If you're going into it because you're going, infrastructure needs, you're a contractor, engineer, things of that nature, obviously that makes a lot of sense. But to maybe start a retail business where the roads are, there's no accessibility, may be a question that we're going to likely have for you. Character more than experience. Character, that's your credit score. That's your credit history. That's actually should have been the first C. One of the first things we look at is, okay, how has this person, managed their personal affairs? Many times, unfortunately, without that business history, that's going to be the indication of, the likelihood of success, with the business. So, credit. Cash flow is ensuring there's an adequate cash to repay business debts, including the addition of a business loan. So working with your accountant, working with your CPA, working with the resources that we have through the SBTDC, Small Business Technology and Development Centers, really talking about the cash flow, again, revenue and expenses. All right, questions to ask yourself before applying for a business loan. How much money do I need? What are my other funding options? What personal resources am I able to invest and risk into the business? What are my other funding options is a really interesting one because many, again, we get, several inquiries in this loan, right? Loan, and that's, if loan is an option, but what cohorts, what micro grant opportunities are there? What other, resource crowdfunding, what other low cost investment opportunities are there into your business? So we are happy to lend. Your bank is happy to lend. But really just and that's another type of consultation that we provide to our business owners is around the different organizations. I think about NC Idea as one, have some really great access to capital programs there that don't necessarily need to be repaid. If you got a great business plan, you're willing to put in the work to go through their 10-week or 14-week or whatever the case may be, that's your equity, right? So this really, looking at all your options. What to do, again, do your research, develop good cost estimates for resources that will be needed. Getting those quotes, we wanted to see the underlying assumptions behind what you're projecting. We want to see that you've reached out to Allstate, that you've reached out to the utility company, that you've reached out to, these line items of how much this is going to, really going to cost you. Educate yourself on available funding options, personal loans from friends, family, home equity loans, leases, and things. Understand the risk with borrowing. You'll be expected to provide security for the loan, which means putting your personal assets at risk. So kind of want to pause there. So, when we look at, a business loan where they're securing all business assets, they're not only securing your business assets, they're securing your personal assets. So, having the plan, having your business plan, having your financials, really being able to help explain to this lender why, this is going to work, is really crucial. Because we're not in the business, we're not real estate agents. We're not, we don't want to come get your collateral. We don't want to come get your assets, right? That's not what we're in business to do. So just really being sure that we have a good plan. And a lot of this is repetitive, but character, resumes. So when we're doing business plans, we get some really great business plans, whether it's, you're going through SBA score or you're using some type of AI generated template. We see a lot of good plans, but you got to make it organic. Who am I? Right? Why am I doing this? How many years do I have in the business? Who's going to be working aside? Even if I may not have the experience, who's going to be the operations manager? Really being able to tell that story to help get the lender comfortable with the person that they're doing business with. It's not just a plan, it's being able to sell yourself. Edit your resume to highlight your skills, your background that directly relates to running your business. Again, if you don't have the relevant business experience, have a plan in place to address the lack of experience. Plan could be hiring someone with the experience, having a mentor, coach, etc. I think we understand credit. We talked about that. What we're looking at is, how you've handled debt in the past. So if you're looking at a $200,000 loan, up to $350,000 loan, one of the things we're going to look at is, has this person had a mortgage before? What type of similar credit has this person had in the past or currently have, and how have they managed that debt obligation? So that's one of the things that's really critical. And I mentioned like it's not being so much a credit score as it is credit history. So just something to consider. What to do, know your credit report, get a copy well before your loan application is made. If you have a low score, clean it up before applying. Consider using a credit repair. We're going to see it, right? The last thing you want to do is, not be transparent, go through the entire process of up to 60 days. Now we've run your credit score and there's issues that, just be transparent with your lender. Give us the opportunity to help you, right? Because now we can give you advice and we can make referrals and we can, kind of get you loan. We talk about loan preparedness. So know your score, be transparent with your lender, please. We talked about collateral. There's the collateral is sometimes discounted based on the easy access to it, right? So you look at a certificate of deposit, we can do 100% because that's cash. If you're looking at real estate, we can do up to 80% because it's a little bit more easy to get access to vehicles, equipment. So it all kind of ties into the access to how quickly we can get that, get that cash back. Okay. Yep, down payment, 10 to 30%, on average, we're at about 10%. 10% having money saved up. What to do, be able to document your costs thus far in the business. They can count as part of the expected owner investment. So I was having a conversation with a small business owner on Friday, and we were talking about the borrower injection, and she was like, man, 10%. Wow, and this was like a $200,000 project. But I said, well, you mentioned already that you've already purchased a trailer. That counts. You mentioned already that you've made your initial deposit on your lease, $4,000. That counts. The money that you spent organizing the business, the money that you spent getting, filed with the Secretary of State, all of that counts. So it's not just you're giving us 10% and we're just using it to, because we're not a depository, so we aren't reinvesting in that. It's really your money that you're putting into the business as that down payment. So I think that's really important. If you're starting a business, include at least 90 days of operating expenses in the loan request. We can do that. So there's actually an expectation to have, and you also want to have a ramp up period included. So if you present a business plan to us or financial projections to us and you're on day one making what project to make in year, at the end of 12 months, then that's not reasonable. There's an expectation that there will be a ramp up period. There's some exceptions if you're coming into maybe a business acquisition or more of a turnkey operation where you're taking over, but even then, right, there's going to take maybe a little bit of time. So, factoring that into your assumptions. Also, if you don't necessarily have a permanent 9 to 5 or you're kind of in a transitional period, include your payroll costs of paying yourself. We had a deal where it was a restaurant. He was starting a new restaurant and he was working 2 part-time jobs. And, we made a recommendation to say, you know what, we would rather you be 100% into this. Let's go ahead and build those payroll costs, the owner compensation into your business projections and just go all in. So, having, that type of information, that amount of detail is something that, we assess and something that we recommend to be sure that all those costs are built. Capacity, we talked about that, what to do, create your projected cash flow for monthly income and expenses just to demonstrate that you can make your loan payments and that the business will be sustainable. Every key number in your cash flow must have some sort of reasonable assumption backing it up. If asked, you should be able to explain your assumptions. So, and it needs to be, we mostly prefer it to be a second document. So on a Word document, many of the more sophisticated cash flow projections through maybe Excel, they have where you can kind of make some edits and you can put some notes, but we really want that to be a side document. And use your AI, use your resources, use your business coaches, and they can help with that. You can simply type into Chat GPT, help create written assumptions for financial projections. based on your industry. You can simply type that in and it will give you an outline of all of your assumptions that you need to consider. And then you can use your numbers that you've already generated to kind of make it all make sense and describe it to your lender. Be sure your numbers show seasonality. Very few companies have the same income expenses every month of the year. So again, your assumptions. So being sure that you factor that in because your lender is going to know. So if you're showing a flat line, you're in clothing, and you're showing a flat line across all the year. You're not assuming Black Friday. You're not assuming the kids going back to school. If you don't have any of those variables, then we're not really sure that you're fully prepared. Conditions, we spoke about that, knowing your competitors. Um, you know, with competitors, sometimes we get that like no one else is doing this. It's very, very rare that no one else is doing what you're doing. And if it is a niche and maybe you're moving from a different geography in the country and it's something that's there that may not be here, still having those assumptions, because not having any competitors really doesn't also, it doesn't give you a baseline to be able to determine success, right? Because there's no, uh, you know, comparison, right? Because so you're really kind of going into it with just blind assumptions. So, making sure, that's kind of the component of understanding your competitor that people don't think about. It's like, all right, what are they doing? What are their revenues? What are their expenses? What are they doing well? What are they not doing well? So being able to explain that not only helps with your, kind of making that case to the lender, but also to your business model. That's something to just kind of consider. How to apply. There's a application that we send out after we go through the intake, the business assessment, your loan ready. We send out a secure loan application that you can complete. Personal financial statement, 3 years personal tax returns. If you're an existing business, we need 3 years of business tax returns. If you're a startup, obviously you wouldn't have business tax returns. And that's where the assumptions come into place. That's where we need the 3-year financial projections. So it's not a deterrent if you don't have those business tax returns, but if you are an existing business, we need to see them. If you're a sole proprietor, something that's been coming up lately, if you're a sole proprietor, um, you need balance sheets. So if you're a sole proprietor, you may not have like separate business tax returns. Your personal tax your tax return will kind of serve as your income statement, but we'll need something separate for your business assets. And many times it's just as simple as your checking account, your savings account. You may have some inventory, if you own some real estate. But being sure you have your balance sheet. So you'll want to talk to your accountant, your CPA, and we all work together to make sure those documents are in order. But that's something that's not there that I want to mention. 12 months cash flow projections. We really want to see we want to see 3 years. 2 years. So your first year will be monthly cash flow projections. Years 2 and 3 will be your annual projections. And we can sometimes, use up to 2 years, but we really want to see three years, but 2 years is the baseline. Resumes of key management that we discussed, application process, complete loan package, internal review, questions and dialogue with loan underwriters. Most loans move from application to closing within 30 to 45 days. So as you see, it's a process. So we simply don't take a request, put it into a system and kind of let the, kind of an algorithm or, some type of systematic process determine, whether we're going to do it or not. We actually are having conversations. We're working with our underwriters. We have a credit committee. We're going backwards and forth with our borrowers. Our goal is to say yes. We're looking for a yes, not a no. So, as much as the business owner can kind of partner with us and be patient, and we can normally get to that yes. If we kind of and a yes may not be right now, but it can be in 6 months. How we can help, reach out to one of your business solutions officers, Bryant Kennedy. We can help you determine if now is the right time to apply for a business loan. Our team is incredible. I actually should have put everyone on this on the list. We have I think now six business solutions officers. I have a territory of Wake County and the Eastern Territory. Eastern Territory. We have Madison. That's out of the Greensboro area. We have Magali. That's out of, we kind of share parts of central North Carolina. She has Fayetteville. We have Jonathan Collins. He's amazing. He's out of Durham, Chapel Hill, Orange counties. Lydia is out in Charlotte, and incredible team. I think Vanessa. So credible team, all experience, background as lenders or background as business owners, and really just here to help is why we're all here. So Brian Kennedy, CarolinaSmallBusiness.org. Here's my LinkedIn information. Sorry if I rambled, but hope you all really found some value in the information provided, and I guess I will kick it back over to the team there.
Yeah, thank you so much, Bryant.